Joshua, welcome, man. How are you?
Good. Glad to be here.
And, I've actually been looking at Supra for a while before having this conversation and before knowing that I was going to be able to talk to you here. So it's an honor. I think what you guys are doing is great. I didn't know, however, that there is like a Jungian psychology concept about like the Supra Oracle. I just found that out this afternoon when I was talking to someone about me doing this interview. Is that was that on purpose or did it just happen to match?
That happened completely unrelated. But I do, from a psychology point of view, I do appreciate Jungian school of thought over, Freudian, for example. But no, I really appreciate Jungian's kind of like Jung's thoughts and his ideas. But that was a completely unrelated.
I figured that it was either gonna have a very deep explanation or it was gonna be a total accident.
It was a
So it
complete
was the
accident.
latter.
Right. But when I came across it, I was like, oh my gosh, I ordered I ordered the product because I was like, this is incredible artwork. It's a really interesting concept. I do want to actually reach out to them again and say, hey, look, by the way, we're called Supra Oracles. And just so you know, we are going to be rebranding to just Supra soon enough.
All right, cool. Well, you get the exclusive people. So yeah, that just leads us right to the point. I know people sometimes like to just tune in to see what that project is or what it is that they do. So why don't you just take it over and explain what Supra Oracles is, and if you want to
Sure.
also give us a little background on yourself.
Sure, sure. So my name is Joshua Tobkin. I'm a co-founder and CEO of Supra Oracles. Before Supra, I was created a crypto R&D lab. So this is created in 2018 during the crypto winter. It was a very difficult time to get attention in blockchain. And what we decided to do is like, all right, well, we have some very, very interesting ideas. Let's continue to use our own resources, kind of bootstrap this project together, me and my co-founder, my co-founders. And what we did is we did a lot of research into other layer ones. We studied all different types of scalability techniques from, from sharding. Back in the day, sharding was a big topic, to how do you minimize the total global communication cost in order to achieve consensus. We also had our own ideas that are actually now being expressed into Supra, that were rooted into actually late 2017, early 2018. So we had some of the original inspiration of what we're doing today has already started from 2017. Prior to that, I was involved in the SaaS industry. So I've did some work in the healthcare industry for a healthcare startup. I did some work for a food supply chain startup, as well as and before that, I did actually work for like the wrong side of the fence in a like ad technology company, right? But I
Ooh.
did get yeah. The truth of the matter is actually I did get a decent appreciation for how that works. It's not always great. I've seen companies just slinging data like it's no big deal, like customer information is super insecure, et cetera. It was like a mind opening for me. I got a great education from that experience. And then prior to that, actually, I had my first startup in the cashback kind of industry. And I was in my early 20s and I sold that to my partner. So I've been doing kind of internet related things for a long time. What attracted me to the internet originally was the ability to use your talent and skills, to use your mind, and to actually earn money from the web. Like at the time before that, I should mention, I used to I got a full ride to study economics at a private university, and I just gave up the scholarship in order to play poker full time. So I was
All
playing
right.
poker, and I mean that was a very interesting education as well. That period, once again, is where I was like, I got open to the fact that like, wow, I can use my brain, click some things, type some things, then I can go to an ATM and like money will come out of it from the internet. It was very abstract, but that did lead me
Which
down a
which
path of
sounds
crypto.
somewhat like sorry to interrupt you there, but which
No, no,
sounds
please.
very weird if you're like 15 years old these days. Like
Yeah.
my niece, for example, she doesn't know there was an era where YouTubers wouldn't earn money.
hmm Yeah, there was an era where there wasn't a YouTube, right?
Also
Um,
before that.
yeah, yeah, exactly. And yeah, so that did put me down the path, and I should mention between the ad tech company and some of my other endeavors, one of the projects I was very it wasn't my ad tech company where I worked at, rather, I should say. Um, there was a project that was very like close to my heart, which was about creator monetization. So it was like creating technology called, DRM, digital rights management technology, to control where your content could exist on the internet, right? And also you can monetize it the way you wanted. So I could say, okay, I created this article or photo, and I can control where it exists on the internet, and I can create a deal, I can create a what's it called, like a contract, a human readable contract, and the code would execute it. So this is before I knew about blockchains and before I knew about smart contracts. In fact, I called that smart. So we call it the smart composer, basically. So some compose, like effectively what I would do today is call it smart contract composition. But yeah, this is before I knew about blockchains, and this is before Ethereum became a really like popular. This is like 2014, 2015. So I do have that like in my core, that this desire to help creators monetize. Yeah, that's something that I do eventually want to revisit.
It's I reckon at some points there, you didn't yet talk about Supra, but I imagine that at some points there, it must have just popped out for you the need of Oracles to just build proper blockchain products that are really decentralized, right? Because
Yes.
if there is something that I recall, and you mentioned even backing a little bit more, you mentioned how you were working all through the crypto winter. And some people don't appreciate the amount of innovation that happened thanks to the ridiculous money that came thanks to ICOs. And all that ridiculous money, of course, a lot of it got wasted, but some of it actually got used to build products that got us to where we are today.
Sure.
I reckon most of the projects there didn't even mention Oracle. Most people didn't even know they existed. Everyone was like, oh yeah, we're going to build a decentralized Uber. And then when they actually sat down, there was no way they could have possibly built a decentralized Uber.
Yeah, exactly. So we never did ICO. So that was even harder to get through the crypto winter. In fact, we survived by building the technology for one or two companies that had ICO but couldn't build their tech. This is very common, though, what you mentioned about like blockchain developers not realizing that they need an Oracle. They come in, they're like, okay, I have this idea, I'm going to do it. And then like, oh, wait a second, how do I get this data I need in order for the smart contract to react or trigger the way I need it to? And it's like an afterthought. It's like, oh, I need to know about oracles. What are these things? Like, how does it work, et cetera? I should mention kind of, so I kind of went backwards in the story as far as the kind of origin story. What did get us into kind of pivot our research lab to focus on the Oracle problem was DeFi Summer. So during DeFi Summer 2020, we heard like there's just so many like Oracle manipulations and Oracle exploits that cause DeFi like protocols to lose a lot of money. These have quote unquote DeFi hacks. Most of these are actually not hacks; they're just exploits. And a lot of times these exploits were a result of like faulty Oracle implementations or, other things like this. So that drew us in. We're like, okay, well, we have done a lot of research into layer ones. Can we pivot our layer one R&D into solving the Oracle problem? And it was one of those, it was like a night in November where we had kind of been thinking about like, should we enter the, like, should we actually try to do a public network, for a couple of months prior? And then it just clicked for me, like in the middle of the night, just kind of sketching it on a couple of pieces of paper, and then creating a presentation to my partners in the morning without sleeping. It's like, hey guys, I have this new concept. Basically, what if we changed our core research and pivoted in this angle? I think we can solve the Oracle problem this way. It seems like it should have remarkable security and performance attributes. And in the end, that's kind of like the origin story. My partners at the time were co-founders are very excited. Said this seems like, let's go ahead and pursue this, investigate this. And what really kind of got us on the ball rolling is that we realized after speaking to other projects that there was a lot of demand for a new Oracle, for next generation Oracle. Of course, Chainlink and others were in the game already. Everyone knows about them, but there's not enough competition in the space, and there's some vulnerabilities with those other designs. Nonetheless, that's kind of where we kind of kickstarted the project. We were able to pitch it to some DeFi groups, and then before we knew it, like we started getting a lot of interest in terms of backing us and such. So that all started in late 2020 and early 2021.
You're spot on that DeFi summer brought a lot of attention back into Oracle, and I reckon that's a bit of like the metaphor of the Trojan horse of the crypto economy, right? You first build something that infiltrates the capitalist system or the institutions or whatever, and while at the same time you're building primitives that everyone can use for everything that's hopefully eventually decentralized and private by default.
Right.
But I guess at some point, a lot of people, and even myself, because I sort of have an understanding of this, but I reckon you can explain it a lot better than what's currently in my mind. Sure. What is the difference between your Oracle solution and the other most known projects in the market, such as obviously Chainlink comes to mind?
Sure. Yeah, I mean, you got to give credit where credit's due, right? So in the terms of Chainlink, right, they were one of the first, well, they weren't the first, but they were one of the first to bring an Oracle solution to the marketplace. And, they've done their contribution, and, they're still evolving into their new model and such. There are some serious limitations, though, in their traditional model. Which includes, when you have nodes that are in their individual clusters, like a group of 9 nodes here, a group of 20 nodes here, and it's not a unified fabric, so to speak. You have a situation where those node operators, they are colluding eventually. I know some of them are in the same Slack group together. Some of them are the same operator under different names. These are things that are just they're hard to prove, especially if all they're doing is delaying the reporting of the data, reading the data first, and then trading against it, and then pushing the data forward. These are types of scenarios that are hard to prove. Of course, if they publish wrong data, that's very obvious, right? But the other types of attacks are a little bit harder to prove. I'm not accusing anyone of anything, but I'm just saying fundamentally, it's clear that given enough time, it becomes very game theoretically unstable. That like a small set of nodes that are never changing eventually will start to collude. And we've seen this in the traditional financial world, where we had like the LIBOR scandal. This is in like 2008, where some leading banks, including Barclays, they would collude together to adjust the kind of interest rates reporting information. And that had massive ramifications to the entire financial system, right? It's known as the biggest scam ever. So that is basically when your data provider is colluding together to get that information into a smart contract. So our solution is to engineer out the ability to do that in the first place. How do you do that is randomization. So in our system, our nodes are organized into small committees called clans. All clans are the same size, 13. Okay. Clans collectively form together to create tribes. So tribes are like a set of clans together. We have multiple tribes. The way that our system works is we utilize something called verifiable random functions, VRFs, to cycle to cycle, randomly select a random set of tribes, randomly select a set of clans from those tribes, and dispatch them to the data sources directly. So we do integrate directly with several exchanges. It's the most popular exchanges, directly to the WebSockets, as well as we work with other data aggregators. These nodes on the clan level at the data source run consensus, and then they report it to our block producer, who aggregates the results and publishes the middle value according to like the 15 out of 21 sources. Okay. The key is this though: every epoch, or every say approximately 12 hours, right? The nodes themselves and clans are reshuffled into new clan formations. So you don't know who your peers are going to be in your clan. You don't know who your peers are going to be, which clans are going to be dispatched to the data sources. This unpredictability, as long as our network is majority honest, will give us these extremely strong security benefits, as well as performance benefits in terms of parallel processing. So that's at a high level, like from the Oracle perspective, how we're different. There's a lot more to share about. I can go into, but before I do, please maybe have another question.
No. I'm just fascinated by what I'm hearing. Please continue.
Sure. So There are some new oracles coming to the table today, and I had a wonderful time enjoying. I actually enjoyed reading their papers. Now, some of these are pretty well thought out. Some very smart people have worked on this. So, once again, you got to give credit where credit's due. These models are primarily based off of like economic game theory, though. So, staking as like the deterrent. It's always better to have a cryptographically secure network. That's always the best. That leverages economic security through staking versus just having mostly a economic security guarantee, which these other two protocols both mostly rely on. As a consequence, what happens is there's a little bit of a relaxed sensation or feeling of like, well, maybe we're not as secure, but we have insurance. So, by the way, we offer insurance as well. We'll talk about that momentarily. But the moment you do that, you do, like I mentioned, you do kind of tend to relax the security guarantees, but blockchains are composable, right? Smart contracts, they compose with each other, they interact with each other. So the thing that these other projects that are missing in terms of saying, hey, we have this model, it seems relatively secure, maybe not as secure as what you guys are doing at Supra, but it's secure. And in case there's a problem, there's insurance. The problem is with their insurance model is that it only pays out the first like protocol that is like engaging with the Oracle data. They don't take into account the second order effects, right? So meaning, one protocol gets wrong data, malfunctions. Another protocol composes with that protocol, reacts differently, accordingly, can have cascading failures, but they're only willing to pay out the first layer, So this is something that they're missing, and it's not something that they're not going to be motivated to pay out multiple layers of it. So really, the answer is you just never get bad data into a blockchain in the first place. That's the actual goal, right? So in our case,
I am going to cut you there for a second because I never thought about that problem. I've had people that offer solutions for insurance on DeFi here, and I don't know what they think about this issue. So like. This is not a dig on any of my friends, basically. But what do you think it would be like the worst case scenario? Should something like this happen? Like a faulty, uninsured contract just resulting. I mean, I'm thinking catastrophic losses here, right? Just due to composability and just like the lowest leg of luck suddenly disappearing.
That's the thing. It's hard to quantify that directly. But I know that in certain scenarios, especially if DeFi were to reach its maximum potential, letting bad data into a blockchain and having these smart contracts react to bad data can have cascading failures. And that could be pretty devastating. Like positions could be liquidated incorrectly, things like this. So really, you have to take the extremity of protecting the data that enters a blockchain in the first place. That's why, it's in my strong opinion, it's always better to create a network that is cryptographically guaranteed to be secure versus leveraging economic principles as the security model. Those are fun in terms of staking and utility for the token, et cetera. And of course, we're a proof of stake network too. We have great, token utility as well. Nonetheless, I'm just cautioning the kind of general audience that you want to have a cryptographic secure solution for blockchain. Otherwise, these, like I said, second order effects could be really, hard to swallow in the future. So, once again, insurance sounds great. Sounds like, we'll handle most edge cases through insurance, but that only handles the first layer, not all the other second order effects. So it's something that we all have to be aware of.
Yeah, I mean that's really important. As I said, I never thought of that, and it makes perfect sense. But if you want to just continue with your previous explanation, that stop right there, at the importance of proper insurance.
Sorry, go ahead and pause for a second. What was that? Can you repeat that question?
I don't know. Well, just if you could continue where you were before I cut you off with the consequences of insurance. So just where you left before.
Sure. Okay. So the consequences of these protocols that leverage economic security, it's reasonable. It's not complete trash at all. It's very insightful. I do want to, like I said, give credit where credit's due. But the issue is that when you do rely on your insurance model and you don't try to protect the data that enters a blockchain with like an extreme sense of urgency, right? Then, and you rely instead on this insurance kind of approach, you are only paying out the first order effects or first protocols that are using the first layer of protocols that engage with your Oracle data directly. You're paying them, but you're not paying all the future other protocols that are composed with that smart contract or protocol that may have also had failures. So in that world, it's, that's why I still believe it's very clear to me that our model is definitely more secure. And what's also really great is it's very performant. So since all this processing is getting done in parallel, we're able to have refresh rates on the order of, say, let's just say 3 to 5 seconds. We try to get it in a 2 or 3 second window, but in case there's a little bit of delay in between the blocks in our system, then that's why I say, 3 to 5 seconds for full finality also. So like that data is, some chains have very rapid block production, but that data that's in those blocks that are being pumped out sub-second is not really final for like 10 seconds later. So you should not reuse that data for 10 seconds later. At least in our case, after 2 to 5 seconds range, that data is finalized and you can use it immediately. So this is something to keep in mind, that block production is not equal to finality.
Mm-hmm. And yeah, that's like perfect, because you have the 4 sentences right next to you: better security, better speed, better finality, and it's about time. So in case the concept of finality didn't set in, would you just like wording it somehow else?
Mm-hmm. So I should to elaborate on that a little bit more. I should mention. So in our case, our protocol is prefers safety over liveness. So our blocks, when they are produced, they are finalized. So it's like 2 to 5 seconds. We try to get it in the 2 second window, but if not, it makes it to the next block. 2 to 5 second refresh rates with full finality. Whereas other chains are pushing out blocks very quickly, but that data in those blocks that are propagated throughout the network doesn't reach finality for 10 seconds. So because of that, right, you can't react your smart contract to that information immediately. You should wait, because the problem is when you have liveness over safety and your blocks are coming out first, and then you kind of reach consensus on it afterwards, is that you can have blocks, forks of the blockchain, or blocks can be rolled or discarded, So that's why you can't actually do large like trades on that. Sure, small things that don't really matter, sure, it's not a big deal. But anything that's like significant in value, you really need full finality. So that's another thing to keep your eye on as a DeFi or smart contract developers that are utilizing oracles. Make sure that the Oracle data, in which the kind of infrastructure in which the Oracle data is being dispersed into the network, understand what finality actually is.
And this is where I ask my question to let people know I'm smart. What do you think about? I got schooled the other day about the importance of not utilizing TWAPs. I don't know. I've just read the term, so I don't know if people actually say that out loud. But like the time weighted average. Yeah, the TWAP, like the Uniswap TWAPs.
Sure. TWAP, yeah, TWAP, yeah. So
as far as I know, that's a bit controversial. Like a lot of projects out in the DeFi world right now are using these kind of feeds, which seemingly are easier to produce because you don't need just that many sources to confirm them. But at the same time, I know that they pose some dangers for the industry and just are more susceptible to exploitations. So I just wanted to collect your thoughts on that.
Yeah. So what the kind of traditional exploit is to do something, use flash loans to like basically move the market and pay it back. That would manipulate the price. So the idea of using time weighted average pricing is that you would get a price that is based off of like historical data that should be a little bit more resilient to instantaneous flash loans that would screw up the pricing. Now, the issue is, of course, that's great for on-chain calculation. Like, well, I mean, it does cost gas, but like what's nice about these, what are called constant function market makers or automatic market makers, is that using this TWAP, you do get some mechanism that you can use blockchain data to get your pricing. However, that pricing is not necessarily a good reflection or accurate reflection of what that asset is trading on in a global market, right? That's just in the blockchain information. Now that works for long tail assets that are not listed on multiple exchanges. There's so many long tails like ERC20 tokens that are being traded that you just don't exist in exchanges because they haven't been listed. That's kind of why like the Uniswaps of the world have gone to popularity, is because you could basically create a market for anything. Now the issue is, once again, is that it's not always the best representation of the current price in the world. That's why you have all these arbitrage bots clogging up, these transaction fees, because they're seeing opportunities to make a trade, but then they'll dump it on or make the trade furthermore after they've made the trade, and then they'll bring it to like a centralized exchange to arbitrage it back to make a profit. So there are inefficiencies to automatic market makers that use this kind of time-weighted average pricing. I actually think, just so you know, we have some DeFi teammates and researchers that are investigating what does an automatic market maker look like using Oracle data, real-time Oracle data. Like, can we mitigate impermanent loss? Can we mitigate, slippage, that kind of stuff? And it sounds like we could. So we're definitely investigating that topic. Yeah.
That's exciting. How does that work for impermanent loss? Because I would think impermanent loss is very much a factor of the markets just going up and down almost randomly, right?
Yeah, so let's see. In terms of using Oracle data for impermanent loss, like in real-time basis, so what we can do is we can create different types of pools, so part of the issue with impermanent loss, from my understanding, and by the way, I should mention I'm not 100% like expert on this at all, but when you have these pools and they're kind of managed by this kind of ratio, this is where like a permanent loss can kind of engage. Now, just so you know, the types of like DeFi primitives that these researchers are looking into, and I shouldn't reveal too much actually, but we are looking into the field of what's called protocol-owned liquidity. So imagine a decentralized treasury that is also backing these kind of pools of funds and using Oracle data to kind of execute the best pricing between these. That at a high level, I just want to kind of mention that's kind of the types of things that we're looking into. I can't go deeper into that though. I shouldn't, not yet.
Okay, but I think that makes a lot of sense, and I think you've very briefly touched on something that I think is very important. That is that not everything in DeFi would work correctly if it's done permissionless. And that's for a good reason, I think, or unless there are solutions that really fix every single problem in the oracles. Because you take something like lending, for example, if anyone can list an asset to lend, then that just becomes problematic, isn't it? You sort of need and there are ways you can make things more decentralized by like introducing DAOs or things like that that vet projects or vet tokens. But what do you think of these? Because I've seen many projects that aim to make permissionless lending. That seems like to be like the first step. They never managed to get traction because I guess they find this problem too hard to solve.
Well, I think AMMs and this constant function market makers they're not going to go away. This is a core primitive of DeFi.
Of course.
So I think these are like core building blocks, and they'll also be used to bootstrap early projects. So I think this is a pretty wonderful thing, actually. And they're definitely not going away. I just think that certain kind of lending pools and lending protocols and other kind of swaps, etc. Some of the problems, there's going to be new models of these, new versions of these that can leverage oracles instead. Now, so I just know that this is like a new kind of like design space that is going to be explored. The moment that you can have high throughput and like quick refresh rates, right, and on a very secure model, right, where you have high confidence that it's virtually impossible to manipulate this oracle, unless of course in our case you'd have to have certainly over 33% of the nodes. Even then, a successful attack is not guaranteed. So you'd have to really substantially affect our entire network. So I'm very excited about the types of DeFi primitives that are going to be enabled with, having a reliable Oracle block by block. Like imagine, by the way, our Oracle data is in every single block, right? So you can act on that with high confidence, and you don't have to wait for it. It's there. So that's the type of system that we're designing, and I just know that it's going to open up a lot of eyes, a lot of minds to a new functionality that previously just did not exist. So we're entering a new era. And these systems, I totally believe DeFi is not over. Yeah, like these liquidity incentive pools and this kind of stuff. Um, they had their place and kind of died out because they're basically a very expensive way to bootstrap a community. But nonetheless, some of them have been extremely successful, right? So I'm definitely still very bullish on DeFi in general. I think that there's just going to be new primitives that are enabled by oracles.
It sounds almost funny to me that someone as prepared as you has to come out and say I'm bullish on DeFi, because if you look at things, you're like, of course you have to be really bullish on DeFi. Like we're just like this is just the surface of things, and I think and you see it right now. We're recording this in case tomorrow the market is on another trend, but we're recording this on the 24th of January, and the market has just massively dumped. And
Yeah.
there are a few theories why, but no one knows for sure why this thing is happening. Which is like another controversial thing to say. Like people don't like to hear, I don't know why this is happening. Yeah, I think we're getting a bit catastrophist. They're starting to think, okay, this is over, or this was a bubble, or that there are some projects that I see blowing up that they had it coming. There were Ponzi's. I'm not going to name names here, but
Definitely.
anyways,
Yeah.
well, what I'm getting to here is it's almost funny to be saying you're bullish on DeFi because this thing hasn't even managed to capture all the TVL it has. Imagine just the TVL that we could have just if we brought in more stable coins or more stable coin usage. Then you would just unlock a whole supply of cash into something like DeFi.
Yeah, and what's happening right now in the markets, by the way, is that there's just a bunch of people that move their money into stablecoins. They didn't leave blockchain. They're just like
Exactly
stablecoins. Yeah, and like a lot of people are. I mean, it is kind of funny because like I have no doubt that this is going to be a small phase correction. We're back to like growing. Like I'm very convinced about this. So I have like I see the market. I'm like, okay, whatever. Like it sucks, but whatever. Like this is so short-term thinking. Like we should be thinking about 5 or 10 years and like how transformative this industry is going to be for the world. So when you have that kind of view, this type of thing is like plus I've been in the game long enough that this is normal. Like this happens all the time. You know what I mean? So yeah.
And if you're hurt right now, and if you're worried right now, it's probably because you're overinvested. Like that's just the way it is. If you're a retail investor and you're all worried right now and having trouble sleeping, well, maybe next time set your stop losses and don't invest as much so you sleep. Like
yeah. People need to be careful. So people need to be careful. They need to be educated about what they're doing. If you invest in this stuff, you shouldn't expect to you shouldn't need it for a while. Like you just shouldn't need it, and you should be able to like keep it in there for years, So I mean, the problem is people realize losses when they cash out at they freak out, they cash it out at the loss, and they realize the loss. But you still have the same amount of tokens you had, and so it's clear, like Bitcoin and such, Ethereum, holding it long enough, you made money. Like what I mean. Depends on your entry point, of course, but yeah, I mean, yeah. So my advice is just like be careful, know what you're doing, don't need this money in a week or two or a month, and then just like take a long-term bet, put it like as they say, put like 1% or like maybe up to 10% of your net worth in it, whatever, but definitely not everything unless you know what you're doing, and you should not be worried about this. Don't be emotional about it. If you're going to be emotional about it, you're going to freak out. You put way too much in. Yeah. So
next time you're emotional about these things, remember I sold all my BNB at $13. I wouldn't need to have a job right now if I had to hold on to that. So don't react like that.
Yeah, it's very interesting how. Yeah. Psychology and
Yeah,
trading is very, very interesting. Yeah.
just going back to like away from like random market commentary,
Sure.
back into the Oracle thing. Um, we've talked only about DeFi mostly because we're at that stage when everything we're building is for DeFi. But I reckon you must spend a lot of time thinking about other areas where oracles could be used. And I would be really happy to hear your thoughts on that, or what are you think could even be the next step for oracles to move into other areas that are not necessarily financial.
Well, you know, there's many things that do kind of have a financial angle to it. I'm not gonna lie, but there are definitely use cases out of DeFi. Let's talk about NFTs and where does like the Oracle and NFT world intersect. So you know, behind you have a piece of artwork, right?
Yes.
And we have this idea of generative art. Generative art is usually handled through some sort of randomness on chain, and sometimes with the help of the purchasers, like you know their transactions receipt or hash, etc., is or something like this is utilized in the creation of that. When you use oracles like ours, and by the way, I should mention we use in our randomness, like we are creating a VRF service as well. Our randomness is very unique. It's cryptographic as well as we leverage what's called the butterfly effect. So from we get entropy into our system through through oracles that from large scale systems that are not kind of limited to the blockchain. So for example, the weather data, price of Bitcoin right now. What's the weather data in Shanghai right now? This type of external systems information are actual factors in our randomness generation. So we add more sources of entropy into our calculations. So we have what we call higher quality randomness than just purely cryptographically based hashing. So back to kind of where oracles can fit in terms of like generative art. Definitely, that's one of them. Imagine having a generative art piece that you could actually track it to the Tonga volcano explosion. It's like this randomness. This generative art was created from the randomness from that event. Things like that. Imagine like if you could have provenance back to like real world events, or like you take into account who won the football game at the Super Bowl. Things like this. That's kind of an interesting concept. Also, in terms of NFTs, let's see here. So there's a lot of talk about creator economies and like the creator economy and using NFTs for that and such like that. That's cool and all. Now, what's happening is these creators are creating these NFTs, and then every time these NFTs are traded, furthermore, they're earning a royalty on this, right? So they make funds on the original sale, and then every time it's moved hands. But what if and that's a very kind of basic kind of NFT model for creators. But there's other models, like the very common one is music. Okay. So what does NFT for music actually mean? Like you could do it that way, like what I just said, every time it's traded, but who trades music like that? I'm not sure. What you need though is to be able to track like performance of that song, like how many times it's been viewed, how many are listened to, how many plays you've had, etc. That information should go into a smart contract and the smart contract should have the NFT should have a distribution of the song was created by 3 artists, each of them or 2 artists get 25% each, the other main artists get 50% the royalties, and then you can get that information to smart contract that pays out the royalties. You can only do that kind of stuff with oracles because you need to get these performance and analytics data, right? And then also with the metaverse. So this is another interesting thing. Suppose I have some sort of item in the metaverse that's in one game, and I'm in from one chain perhaps, and I'm trying to get it to another game in another chain in another ecosystem, but they're composable and they're but what if I need to get some attributes on its past performance? Maybe that can affect its strength or power or whatever it might be in this other game. How do I pass that information over? You probably need oracles for that as well. So, cross-chain communication, we're more than just like getting external data on chain. We're also a way for chains to communicate with each other and to move assets from one chain to another. When we have to bring our Oracle data to another chain, we have to build a bridge. that bridge can also move assets cross-chain. So we think Supra is going to be a really important infrastructure to facilitate the multi-chain vision and to enable new cross-chain primitives and experiences that otherwise were not really feasible.
Have you heard of router protocol?
Mm-hmm. Yeah, I have. Yeah.
I get a chance to talk to their co-founder the other day, and I was very interested, and I thought his answer was very compelling. So I was wondering what you would say to the same question. I asked him because you see, I mean, a preface.
Sure.
You know how the crypto ecosystem is. So whenever your Jesus figure, call it Vitalik, call it Charles Hoskinson, call it whatever, say something, that becomes like the agenda for the week or for the next 2 weeks. And Vitalik has sort of come back with his critique on cross-chain systems, pointing exactly to that bridges have vulnerabilities that can be exploited, and basically that's his argument anyways.
Yes,
the bigger the bridge gets, the more attractive it gets to attack it.
Right. Yeah, these are very legitimate concerns. I mean, honestly, I have my strong opinions of Ethereum 2.0 design. I think it's mediocre. I think this idea of like layer 2s, layer 3s is mediocre as well. Also, layer 1s can have layer 2s, like all of them can. Polygon, for example, they call it sidechain or layer 2 or whatever. That's going to compete with Ethereum, just so everyone knows. They should know that. Don't be fooled. Polygon's competing with Ethereum directly. They're going to have their own ecosystem. It's very, very, very much clear to me. In terms of bridging technology, though, so this is now when you bridge from a layer 1 to a layer 2, you do allegedly you inherit the security guarantees of layer 1. That doesn't mean necessarily inheriting, like when you got assets in layer 2, getting that to layer 1 again, you're kind of bound to those security guarantees of that layer. So you might be able to move it up, but you might not be able to move it down. It depends, right?
Of course.
That's something to be aware of. That's still cross-chain or cross-ecosystem. People need to be aware of. In terms of so absolutely, Vitalik's criticism on cross-chain bridges is very legitimate, right? So what I mean by this is if you have a centralized bridge, or if you have very little node operators, right, who have a limited stake, let's just say collectively the stake is $10 million. The amount of value you move from one chain to another should be about half of the total value stake of the bridge nodes. Because if you need to just have 50% of those nodes colluding, for example, then if they can falsely sign things on your behalf, then the equilibrium is half of the value of their stake that they're risking to be slashed. So like you in that bridge, in that connection, you should not use, like collectively, all assets combined should not exceed $5 million, right? So you're kind of in that instance. So in terms of like, that's kind of like the game theory behind it. What you want to have is a larger set of nodes, right, that are acting as bridges. These nodes should be existing on both sides of the fence. They should have like either a light client or full client on the destination chain as well as on your bridge chain, and then you want to have both, once again, a cryptographically secure network as well as staking. So you want to use like threshold cryptography, you want to decentralize it, and as long as the majority nodes are honest nodes, then you're going to be in good shape. Now, once again, you are limited to the number of nodes, your amount of stake, and how much money that's moving between these, that they could eventually becomes rational for them to hit and run, right? Like we stake 5 million, but there's 50 million, 100 million, 500 million on the line, right? Which we've seen. I think this is, anyways, this is the type of scenario where it gets not healthy. So there are limitations to this. So especially when you do cross-chain wrapped assets, very, very, you got to be careful what you engage with. If I have wrapped asset from one chain, one bridge that's somewhat centralized and not very secure, and then I've thereafter wrapped that again and moved it to another chain that has used a secure, bridge, it is possible that one bridge fails, like the weaker one fails, and now you have an asset that's kind of in limbo. It's definitely kind of possible.
And in the meantime, you have people like fractional reserve banking.
Mm-hmm. Yeah. I mean, those are interesting ideas as well. So So I just to kind of tie up the bridging cross-chain ecosystem. I definitely believe it's going to happen. You have to be careful about what you use. You want to use a system that is prioritizing safety, like strong safety guarantees. So number of nodes, how much stake, and if you notice a bridge has too much on the line, don't use it because I mean, if it's like way too much on the line compared to the number of nodes and stake and the ability to attack it, that's more risky. So I think someone has to create dashboards eventually to measure this stuff. Be like, look, these nodes, there's 50 of them. They only have cumulative value of loss stake that they could lose of up to like 100 million, but they're bridging to 5 billion, right? That's a very unstable model. So yeah, these are things that we're gonna have to work through. And now, a lot of this is if you do have a set of nodes that are decentralized that are not colluding, then you can leverage like things called like threshold signatures, threshold ECDSA, threshold BLS signatures, threshold Schnorr signatures, where when I say threshold, I'm saying like as 2/3 of the nodes have to come together and agree in order to sign something to move the asset back in or out.
Okay.
So yeah, so those are much better designs, but you once again still have to be cognizant of what's the maximum they could lose, what et cetera, et cetera. So it might be useful to do things like KYC these bridge nodes, like not the end consumer, but the like actually KYC them and know who they are as like individual. Like that might be a suitable solution. Some bridge designs include Intel SGX, trusted enclaves, execution environments. That is a whole nother can of worms. People have strong opinions about that because we've seen like zero-day attacks on those, etc., from the manufacturers, whatever. So I prefer decentralized cryptographic guarantees using staking as a an additional economic security guarantee. But this is still early. I don't know exactly what the end all be all is going to be. But I think I should mention I kind of sounded a little bit critical on the ETH2 design plan.
No, you just call it mediocre.
Well, yeah. So I mean, I want to be careful what I say here. I should explain why. It's because composability between layer twos and ZK rollups or optimistic rollups are difficult, as well as finality is elongated. In optimistic rollup case, finality is a week. You have to wait a week before you can use it. So before it's actually final, because you have to wait till the challenge period. ZK, that's still on the order of hours, right?
Yes.
And then so a lot of use cases don't work anymore. Composability is a problem too. So that's why I'm not super bullish on that. But hey, it's I think the Ethereum Foundation folks are really smart. So they're making their bet in a view of the future, and I think that's totally reasonable.
I like that conclusion because I was going to ask you because I have never heard someone like outright call it mediocre. And now that you explain it a bit more, I can see why you think of it like this. Maybe the word maximally strong, like to its actual definition, it's exactly what you mean. Yeah.
I should clarify also, this is just one person's opinion, and I am the type of person that has strong opinions loosely held. So until I hear a better explanation from what the information I have currently, that is my opinion. I do think and have tremendous respect for, of course, for Vitalik, but also the entire Ethereum Foundation folks. They are very, they got, from my consent, I love that they have such a strong sense of community. They're really hardcore cryptographers, I think they have a really great mission. So I do want to, once again, credit where credit is due, and we would not be here today without them. So, we've got to say thank you to them. Yeah.
And your bit about KYC, I thought it was really interesting because I would say like you've gone really deep into thinking about these problems, and you're offering some solutions that I've never heard coming from anyone. In general, I would say like the metaverse concept usually depends on oracles. Everything on DeFi usually depends on oracles. I just wanted to see if you have any case for things that do not necessarily need oracles, or where you think your let's call it sector, is not going to be that important.
Okay. Let me think about that. I am kind of the thought that Oracle can touch almost every sector. So so content function market makers, AMMs like Uniswap, those don't need oracles, right? But there's going to be new iterations on that type of technology that can be enabled by oracles that have other major benefits in terms of cross chain. So that's the thing. When you do cross chain, it's very nice to have native oracles and to have the ability to communicate cross chain and to run consensus on that. That's why, by the way, Supra has its own blockchain, because we can manage our nodes. We can also run consensus, and we can reach on chain consensus and move proofs back and forth between chains that this has been occurred. And what else? So what are the major use cases of blockchain? So we have DeFi, we have this composability in the metaverse, we have like IoT meets blockchain for supply chain management, we have generative art. All those use oracles. What else? I'm trying to think of a case where it doesn't, or there's absolutely zero application of oracles, or there's just no fit or need for it.
And just to give you time to think,
sure.
I'm asking these questions precisely because I can also not think of any area that would use it. It's just like one of those things where, for example, you said cross-chain. I wouldn't want to use any cross-chain feature that does not use oracles. Like that just seems scary.
Kind of risky, yeah. I think so. And of course, the quality of the oracles you use really matter. So going under the hood to understand like how they cryptographically secure the methodology is really important. But yeah, I agree. Like, to be completely honest, like it kind of touches every sector of blockchain. I think I might be missing something completely obvious, which I'm like, oh, I just didn't think of that. But at this moment, I am quite certain there's a use case for almost every sector.
Yep. I think, I think that's right. If you figure out any sector that doesn't need it, just send me an email and I'll include it in this list.
I'll look into it.
I wanted to ask you, Josh, since you're already giving me a big chunk of your morning here, would you like to add anything else here as we start wrapping up? Is there any subject that we didn't touch on that you'd like to cover, either for your interest or for your community's interest?
I could say that we have some, without saying the names, because the names are going to come out around early February or mid-February, where we have a huge announcement we're going to make in terms of who's our backers, as far as like incredible really strong venture capitalists and funds. Now I know we have this whole concept of VC chains. We're not exactly that, just so you know, because we've capped everyone very low amounts, much less than they asked for. Some wanted to do 15 million. We're like, hell no, we can't do that. And also we have in total over approaching 200 investors, funds, smaller funds, as well as influencers and others that can help us that are coming into our rounds. We're planning to, do a public sale, right, in the months to come. Now, we want to make sure that we, because we're more than just an Oracle. Actually, we're layer one with native oracles that facilitate Oracle services as cross-chain communications and bridging, et cetera. There's actually more to it that we'll be revealing soon enough. But to get the most information, what I recommend is join us on Telegram. But actually, even more than that, move towards our Discord. So we're slowly pushing our Discord as a major community channel. We'll be releasing great information there, research and such. We've been actually pretty close to our chest on our technology and methodology, the details of it, but we're revealing it very soon. Furthermore, stick around. We're always open to hire new talent, right? Whether that is a programmer or it's a social media, content creator or researcher, whatever. We're open to evaluate talent from around the world. We are a global distributed team. If there are other ways that we can help, or use cases that you'd like to discuss, we have already signed signed up over approximately 400 projects that are looking to work with us in one capacity or another. Some of them are currently using an existing Oracle, but they are also considering going cross-chain. The moment that they go cross-chain, they're wide open to consider a different Oracle. So we have wonderful projects that we're partnering with. We have some great announcements to make, and we have some prizes and giveaways. And I don't want to like spoil it, but our early community members will have some major benefits prior to going to mainnet, right? So we see you, we appreciate you, stick around. Please don't be a bot. Like, that's really annoying. Like, I prefer like actual human beings. And we will do like, in our whitelist and such, like we will do actual KYC. So there's no use in using their bots. Okay. But all in all, like I said, despite the kind of emotion of the markets right now, which, I can understand is an emotional period for many people, I'm saying please have a longer term view of the world and the future of this industry. I cannot promise you anything in terms of ROI. I can only promise you that we've been in the game for a while. We've been through crypto winters before. We never stop building. We won't stop building. And we have a huge roadmap of product suites that are just incredible, that will enable new things that just weren't possible before. So stick around for that. And you're always welcome to find us on our social media. Twitter is a really common place. Telegram at Supra Oracles. Oh, one last thing I should mention. Please be very careful. There are some fake sites out there saying that we have done a public sale and it's going on right now. It's not true. Always be careful. You will get it directly from us when that does happen. It will happen probably, let's say April, March, or April, May this year. We're not rushing into it. But I just want to let everyone know that we're a very stable project. Our co-founders have been together for years, right? And we're in it for the right reasons. So, which is to have a real impact on the world. This technologies will bring up transformation to Earth. It'll make a lot of things way more efficient and help create a more equitable, fair society. So we're in that camp. We're not in the camp of short-term thinking and trying to profit as much as we can in the short run. Well, we do hope, of course, I cannot promise anything, but we do hope that our early adopters and early community members. So we believe that blockchains are transformative, that they will bring a lot of efficiency to the world, and that our early adopters, while I cannot promise any ROI, return on investment, I do believe that if you stick along with us, you're entering and onboarding a rocket ship. There's a lot more we do than just oracles, and all this utility is going to, hopefully be the value is going to be flowing to our token holders. So, we appreciate you. Let's, looking to form a long-term relationship with everyone.
And from my end, well, what I would tell people, I mean, just echoing what you just said, and you just said it's in a way more articulate way that I could, but like, look, the worst critique that people, that this is going to sound dumb, the worst critique that people have for DeFi and blockchains is that they're VC owned, and you know how VCs are. They don't like to lose money, and that's like the dumbest possible case you can make for this industry being bullish. On the smarter case, like, there are really smart people working in this industry looking to rebuild a lot of things. These solutions, when they're properly deployed, are going to be absolutely better than everything that's out there. And if you're listening to this, and if you made it through this episode, you're probably ahead of 99.9% of the population, because we threw some extreme, very specific terms here that the people walking down the street don't understand. So take advantage of that. Think long term. Think even medium term, because medium term, I do believe that these systems do reward people that stay in them and that don't panic. And well, Josh, it's been an honor, man. I'm always welcome to come back.
Yeah, it was great to meet you, and please do reach out. Thanks a lot for your time as well.
Okay, perfect. And thanks to you, everyone that's listening. Bye-bye.